All right. Good morning, and good morning to you, Julian.
Morning, Paul. Morning, everybody.
Hope everyone is well and ticking over okay. Things seem to be, getting back to some sort of normality, which is good. We keep saying that,
Yeah,
but it's a slow process, isn't it?
yeah, it is. It is. But we're in the month of November and heading towards Christmas, and certainly I think talking to people in Victoria and New South Wales and obviously Queensland, and they're the sort of the main guys I speak to, and they're all really positive. And
Yeah,
it's
yeah. It
great,
seems to be
great
a
that
lot
it's
of
so well.
business being booked in for Christmas now, and everyone's,
Yep.
as you said, talking about it now, which is good. So hopefully, we can pick up some of what we dropped earlier in the year with a bit of luck.
Yeah. Yeah, so it's really exciting to stop talking about it, and we can start talking about trade and
That's
and
right.
get
Yeah,
back
get
to
back
the
to talking about operational things and marketing and growing the business again, which
yeah.
is rebuilding, I guess, after what's been a very tough 12, 24 months, hasn't it?
Yeah, definitely. And I think, today we're going to look at, the art of negotiating and negotiating in general. And I think, there would be so many businesses over the period with obviously COVID concessions on leases and having negotiate their way through that with landlords and agents and the likes that are probably been more exposed to negotiating than they ever have before.
Yeah.
And I thought it was a good time to maybe just to go back and have a look at how negotiation works and the structure behind actually negotiating.
Yeah,
Um,
no, that's great. And
yeah,
this is very, very useful for, I mean, regardless of what you're doing, whether you're negotiating the lease, obviously there's a very big negotiation, a lot
yeah,
of components to look at and consider there. But it even comes back to things like, I mean, obviously the sale of the business, there's a lot of negotiation
yep,
involved in that as well. But even
yep,
things like at the moment, recruiting staff, you need to really be on the top of your negotiating game in bringing on staff. At the moment, everyone's struggling to get staff, and how you
yeah,
negotiate with prospective employees, I guess, is another. It's another form of negotiation, isn't it?
yep,
How you're positioning yourself, what you're offering,
yep,
how the interview goes, how the whole process goes. So I think there's whatever stage of the business cycle you're at, there's use in what we're going to talk through today. And I know,
yeah, definitely.
Julian, you've had the insight and the experience and good fortune to have a lot of training on this skill. So I'm pretty sure I'll pick up some bits from this today. So keen to get into it and
Yeah,
find out from
and
your side of things how it
And it
works.
always evolves. It really evolves. And, suppliers is another one, Paul, that comes to mind that you negotiate with all the time in the hospitality industry. And, whether you're ringing up a gas and electricity company and trying to negotiate a better rate, there's so
Yep.
many things in the day-to-day process. You have a function that walks in and wants to book a function room or a function evening. You're negotiating all the time. Most times people don't realize when that negotiation has started. So, what
Yeah,
we'll
yeah,
do
it's true.
here is probably recognize, the first part is when does a negotiation start, and a structure behind it. And if you stop and think about it for a second, Paul, is negotiation has been going on obviously for really the end of time, the start of time in a
Yeah,
sense. It
yeah,
was negotiating. It's such an old thing to do, and I think it needs some respect in the way that you do it. And I've
yeah,
learned
I
that
agree.
through the years that I've tried to cut corners on negotiation or circumvent the process, and it's only ever got me in trouble. So
Yeah,
now I respect and understand the process a bit more, and I can let it play out and be a bit
yeah. I
more
think
patient.
it's like most things as well. In my what I found in my experience, it comes. The more you do it, the easier it becomes, and
Yeah,
you have to kind of embrace it. But when you can step back, as you said, recognize when the negotiation started and what the process should look like to be successful, then you go into it slightly different in a different mindset
yeah,
yourself. So
yeah.
yeah, look, I'm keen to jump in. So
Let's go.
I'll be driving the
Yeah, you're
slides, and I'll just
controlling it. So
let
sorry.
you go.
Yeah,
So
yeah. So we'll get through this. So
I'll be the
let's go. We'll
clicker.
jump in to the next slide. So click.
Okay.
So
Oh, not a good start.
it's a bit slow. That's all right. So I think the important thing is this slide automatically recognizes that these guys are negotiating. So the process starts quite early in the piece and probably earlier than people realize. If you're looking at buying a cafe, or you're looking at selling, or you're looking at leasing, or you're negotiating with your landlord, the negotiation really starts when you first book that appointment, or you step over the line to look at a cafe, and you start asking questions. There, you're starting to negotiate and build, a negotiation process. So, recognize when you start, because some of the leading questions and listening is a really important point, Paul, is to ensure that when you ask questions, you actually listen to the answers, or you're in an environment where you listen to problems or objections that may arise. So that's why it's important to recognize that the negotiation has started now.
Okay. Yeah. Fantastic. Yeah. That's good. Good insight. And I guess with the sales piece, selling the business, then the context for me with what you've just said there would be, the one key word there is the objection. So, as we know, with the sales process, it's about identifying objections. So during that initial negotiation, as you said, when you've identified its then that's it. You start listening, actively listening for what any objections might be. So great point.
And don't go in, Paul, with a preconceived idea it's all about money, because it's about much, much more. So
100%.
Listen,
money's a part of it. Yeah.
Yep.
Okay.
Click. This one will take a few little ones to pop up. That's it. So this is a really, really important diagram, Paul, and I'll just unpack it quickly. I won't be, we're not going to go obviously point by point, but this is really, really important. Okay, so the first point is when you respond to an offer in any form, the true negotiations has begun, right? Mm-hmm. So, again, if you're buying a cafe and you get a heads of agreement, and you need to respond to that heads of agreement, we're on, it's game on. Okay. So usually this diagram here is showing you, if a buyer comes out with a price, or an agent comes out with a lease price, that price is usually what we call the upper financial limit. So on the right-hand side, you'll see on this diagram, the upper financial limit. So they're coming out to saying, this is the wish list of what we want, right? Now, when you respond to that offer, you're actually putting a mark on this table. Let's say it's where the lower financial limit is on the left-hand side. You're putting a mark on the table as to where the parameters are of that offer. So your wish list is here on the left, and it's obviously under what they want. And then in between that is where the negotiation will land.
Right.
Okay.
I got you. Yep.
So that's what that table explains. So the majority of the time, and you could probably back this up or have some input onto this, the majority of the time, you generally agree at the midpoint of the negotiation. So you generally agree where there's an upper limit here and a lower limit here, you generally agree to a price in the middle somewhere.
Yeah, now maybe there's a lot, like, as you'd appreciate, there's a lot of variables in there. And it would depend on which side of the table I'm representing, because we do look after both. But it's a fair call to say the midpoint is typically where most deals will land up.
So you can see in this, and so you can see in this diagram here that you've got the midpoint. It's going to land in between. Now, Paul, if you do your job really well and you're working for a vendor or an owner, then that midpoint might be skewed to the upper limit a little bit. Or if the buyer does a really good negotiating, and we can have a look at different constraints to that or reasons to that, but they may be on their lower side and they get a great deal. But recognizing the upper limit and the lower limit is really important, because it's going to be in the middle, and you can start to understand this is a process. Okay.
Yes.
Now, where this falls down, Paul, is on two sides. Is if the upper limit is a ridiculous price. Or the lower and the first offer is a ridiculous offer.
Yeah. So maybe we should have it in brackets there above that, reasonable, because
reasonable. We'll cover. We'll definitely cover.
You very much you see both. You see people come to market with no real valuation or appraisal done on the business, and it's almost like a wish. That's what they wish they could get for it, and that's what it's listed for. And then, as you said, in the other side, you get the tire kickers, the time wasters that, something that's listed for a couple of $100,000, they'll offer $50,000, with no way of backing that offer up. So it's a very good, especially with the business sales side, a really good point that it has to be a reasonable figure on both sides.
Has to be a first reasonable offer, right? And you know, I mean, I negotiate pretty much every day, you know, financial negotiations. And if the lower offer is ridiculous, like you said, I don't even counter.
No,
I don't even counter. I just say, "There's my offer. Come back when you're serious." And it's not being rude. It's just not in the ballpark, and I'm not playing that game. So it's got to be a reasonable.
It does get you a bit like that. I've got to the point now with a low offer, a really low ball offer. Typically, what I'll do now is I'll go back and I'll say, look, at this point, you know, obviously that's a long way off where the expectation and the listed price is. I'm really interested to know, and I always use the word interested. I'm interested to know how you've come up with that offer. And, you know, look, if you come back with a solid argument that I've overlooked something or the vendor's overlooked something, let's talk about it. So I keep the communication open, but I want to find out how they've worked that out. And a lot of times in my day-to-day work, I find that low offers come in because that's all the people have got to spend.
Cash.
It's nothing to do with where they see the value of the business. And if we can identify that, and this is, I guess, something for people, I don't want to steer off too much on the sales side, but for people that are selling, and if you are selling on your own, then I want to give you insight that that's an angle that we use to then overcome. That's an objection effectively. Look, I'm interested in your business. I'm offering a low amount because that's all I've got, or that's all I think I've got access to. So once you know that, then you can go in and try and dig into more detail and then hopefully present a solution. So, you know, we can connect with a finance professional. Even in some cases, we've structured deals with vendor finance. So it's a good opportunity to kind of further investigate. Like, if are you just an idiot making a low offer? Or are you just being a bit naive? Or do you need some help? You know, there's different ways of that I use. And I used to be quite defensive because I like to protect the value of anyone that we're working with. And you think, well, you know, what the hell? Why are you making such a ridiculous offer? But I've kind of, I think probably
they could be a
experience and age mellowed a little bit.
Well, I think they could be a buyer for another property or another business that may be best suited to. And we find that too, that if, you know, they may not be able to afford a lease in a right shopping centre, so maybe it's outside the shopping centre, maybe it's another property or the likes. But I think making a ridiculous offer can just derail the negotiation. So this is a good table.
It can put the vendor off, completely put the vendor offside as well, 100%. So you have to be, if you're on that, you know, if you're on that side of making the offer, you need to consider that as well, you know. And the same thing with lease negotiations, that you will see this all the time. And I see it where, especially when there's an assignment of a lease, people come in, you know, asking for 6-12 months rent free, a reduction in the rent, all these different things. And we're like, hang on a minute. At this point, you need to negotiate with the landlord for the landlord to allow you onto the lease. You can't wade in asking for everything. And that's, you know, something, as I'm sure you'll touch on later with negotiation, it has to be a deal that works for both sides. It's got to make sense. So that lower limit is crucial.
And I think in this scenario, there's a win-win in what this is saying here, because, you know, obviously there's an upper limit, lower limit, and you meet somewhere where both parties can agree. That's a win-win. Right. That's a win-win. So 100%. The midpoint generally reflects a win-win. You're happy to accept the offer and the buyer's happy to pay that. So there's a structure to negotiating.
Exactly.
Just one point on this, Paul. Sorry, this is what I learned. If I try and bypass this structure that I'm showing here and just get straight to the deal and say, okay, let's stop going back and forth. This is what I'm going to pay you. This is all I've got, or, you know, this is what I need. You'll find that trying to do that quickly comes back to bite you. You'll find that even an offer will come back in and it will be marked up again with something else on it. So people like to negotiate it because it does feel like they're adding value, and trying to circumvent that and just get to the point doesn't work a lot of the time. So it may be considered a game, Paul, and maybe you can call it a game, but you have to play it to some level.
Yeah, it very much is. Yeah, and both sides have to come away thinking they've won. Even if one's coming away thinking, conceding, thinking that by conceding they've won, that's great.
Yeah, Yeah.
It's,
Yeah.
it's all about, as we said, both sides have to be happy. That's a good deal, isn't it?
Yeah, correct. All right, let's go.
Yeah.
We'll keep moving. I'm conscious
All
that
right.
I'll talk too much, but so there should be a couple 2 points here.
There we
That's
go.
it. Beautiful. Okay, so anchoring a negotiation. So to have a successful negotiation is what we just said before about understanding people's objections and understanding the other side of the fence. If you go into a negotiation and you just ignore what the other person wants, it's not going to be a successful negotiation. Okay,
Agreed.
so in this
100%.
point, it could be price. As I said, it's not always price, Paul, too, but price and time are probably two of the more important ones. And I think you'd sort of see that too is, time can be a really, really important negotiation factor. Some people need to get out quickly. Some people are happy to stay in a little bit longer, or maybe they need to sell a business or an asset or the likes to be able to transact. So price and time is really, really important. Now, the time factor in a negotiation is one of the most important aspects of it, because he who has the most time usually has the upper hand. Okay, so there's a pro tip here, and it's really, really important. So if I'm under pressure to get a transaction done and I need to do something really quickly, then I've got the lower hand, because I need a transaction, and I'm going to make a mistake, Paul. I'm going to go too fast.
Yeah,
I'm going to try and get a deal done really quick and rush it because I'm under time pressure. If I'm like, I don't need to take that deal right now, all of a sudden it just changes the whole negotiation structure. Or, I don't rush back to you. I'm not going to counter the offer on the same day. I need to see other offers to come in. No rush. I know my price, so I really want to get that price. These are the reasons. So all of a sudden, when you change that time pressure, it changes the side of the negotiation.
So if we talk, just steering back to the sales side again, for somebody that's selling their business, what can they do to kind of strengthen their position in that regard?
Well, I think if you're selling a business and you've worked through a valuation with you, Paul, or with a broker or yourself, and you've got that valuation, then you set yourself a time limit, and that may be that, okay, I need to sell this. I've given myself time to sell it. I'm going to give myself 3 months to sell it, 4 months to sell it. It's not a month. It's not, if you run into it and go make a decision to sell something really quickly, you're automatically putting yourself under pressure.
Exactly.
We'll cover planning in this in a minute, but that falls back to the planning of it.
Perfect.
If you can see that you're going to sell a business in the next 6 months, or you can start to see, hey, I'm getting to the end, I want to sell it, start planning. Give yourself the time to sell it.
It's nice someone else saying that instead of me saying the same thing all the time, but it is crucial. And we see that all the time. People that come to market because they've been forced into a sale by one of the 5 Ds that we always talk about, it's always a better result for the person buying than it is for the person selling. So preparation, planning, and going back to where GSE's roots, exit planning and having a clear path to exit, so that you have a business that's ready to sell at any time, will take away and will basically give you that upper hand in the slide that you're talking to here in relation to time, because you're not going to be pressured, you're not going to have the urgency. You can afford to sit back and accept an offer if you feel it's the right offer at the right time. Otherwise, you just stay as you are, that's the way. Those sales for me are so good, because it's very difficult to get a strong and good result when you've got somebody that's desperate to sell. It's never a good place to be.
Never a good place to start negotiation. So
not.
Summarizing that this slide is also understand the other people's objectives. For them it may be time, and maybe you're on the other side, Paul. Maybe you're a buyer and someone needs to sell, and you're getting an indication that they need the money to transact. Then that your lower offer, your first lower offer is probably going to be lower than you originally would have done.
Yeah, that's right. And that's whichever side of the equation you're on. For me, the key is about needs analysis. It's working out what does the other person need, what do they want, what are their motivators and drivers. And at the same time, and they always talk about this with property or business inspections, if you're the person selling in either of those situations, then it's about you getting more information from the other side than they get from you, and you get a better understanding of what levers can you pull to make this deal work for you, but also to make them come away feeling that they've got the result that they're after.
So the minute you walk into an inspection of a property or a negotiation with a supplier or a third party, you have to listen, because that's what I was saying before about the negotiation starts at that point. Like it really starts quite early. So if you don't listen and you miss an objection or an objection or an objective, then you're not really understanding the negotiation.
Yes, so true. Yeah, and it's a really important point. Active listening is something that's is a skill that's really worth honing in and developing whatever you're negotiating or selling.
Whatever. Yeah. All right. Next.
Okay.
Click. One more. So this is just looking at some common mistakes. So we'll go to the next one. So these are the common mistakes to avoid. There's about 6 of them. Is there? 1, 2. Okay. So I think making an unsuitable offer due to time constraints or pressure. So we've covered that. So again, just really being under pressure and making a ridiculous offer or accepting a ridiculous offer. Again, the time piece just plays into the hands, right? You're going to make a bad decision if you're under time pressure. Neglecting the other side's position problem. We've said that. It happens a lot, Paul. I do see it a lot. Even landlords, I'll talk about landlords just quickly though, is even landlords, some think differently. Some are investment funds that a valuation on a property is really, really important, Paul. And then other landlords, cash is really important. So they'll do a quicker deal. So I've seen landlords that'll sit there and have an empty property, and sometimes you scratch your head and think they're not going to, lease that property unless they get their dollar figure. Aren't they better off having someone in there? But for them, valuation metrics are really, really important.
Yeah. There's a town near me that's like that, where people are baffled why landlords would leave the property empty, but it suits them because if they come in, like you've said, somebody comes in on a reduced rent, lowers the value of the property.
Lowers the value of the property,
and their whole portfolio goes down. If they do that across 5, 10, 15 properties, that's a big drop. They can't leverage. They can't refinance.
Correct.
So
and then there's some businesses that just want cash. So
exactly.
So understanding that is really, really important. Letting price dominate everything. People just get completely blinded, and again, owning or buying a cafe or selling a cafe or having a lease. There's so many more factors than just what rent you pay, as you and I both know. Rent reviews and all that sort of stuff. Your counter offer is not realistic in response to your other offer. So you and I said that puts you on the back foot. If you make just a ridiculous offer, it can put you on the back foot. So being aware of that. Neglecting your walkaway position, very big mistake that a lot of people make.
Just for people that aren't sure, just what is that? What would that relate to?
Yeah, so there's probably 2 things. So if you're buying a cafe and you go to your accountant, hopefully, and you've done your preparation, which we always hope that people have done, Paul, that they may say, okay, well, I've got $250,000 to buy a cafe. That includes, some working capital, which will get me through, 3, 4, 5 months worth of working capital, and I can, manage it and have time to make it succeed. Okay. Then you get there and you fall in love with a cafe, and you end up buying it for $300,000, and all of a sudden your walkaway position was $250,000, but now you've fallen in love with it, and I've paid $3,000, and I've eaten into my working capital. Now I'm under pressure to succeed in a month, otherwise I'm going to run out of money.
Right. Yeah.
So you need to be able to say, I cannot spend over $250,000. I have to walk away.
Yeah.
Most
and
people
the same, I guess, on the reverse of what your figure is to sell.
Correct.
If you've got, and a lot of people do neglect to look at the balance sheet and work out, if I stop trading next week, what do I have to pay? What are my liabilities? So, what you don't want, and this happened to me once, is to overlook things and realize that you get smashed with unexpected expenses or tax liabilities after the sale's gone through. And I had that with actually one of my accountants had missed the fact that I was triggering a capital gain in the way that the business was sold. And I ended up losing 40%, which, you only do that once, let me tell you.
Yeah.
So that
and
is
when
something I really like to try and, really make people aware of. Like if you're talking about the purchase side, but on the sales side as well, what is the figure that you're going to be able to walk away with and do what you need to do, feel that you've achieved what you wanted to achieve, and clear it and pay any liabilities that you might have. So very important.
And even in leasing a property, I've seen a lot of people that get emotional, which is the next point, is getting really emotional about it and end up paying too much for it straight up, and then not really sitting back going, well, 5%, 4%, 3% increases over 6 years, all of a sudden the rent is way out of whack.
Yes,
and they've made that the bad decision at the start was actually where they end up.
So
you
would see a lot of incentives drawing people into leases that they really shouldn't sign as well. I've seen that a lot of times where big fit out contributions have been thrown around only for people to be signing a lease that makes no sense for the business.
Yeah, it makes no sense. Correct. I've done that. So, and it failed.
Yeah,
and
we've all been there.
I shut it. I shut down a restaurant.
Yeah. Again, something you do once, and hopefully something that having us, on your side, if you like, or to refer to or to ask, if we can save even one person from making a mistake like that, then this has all been worthwhile for me.
100%. Yeah, I don't want to see. It was very, very stressful for me.
It just makes you feel. It's not a good place to be, is it?
No. No. So we're here to help, guys. We're here to help.
Yeah, that's it.
And we've made the mistakes. All right, click. So key negotiation guidelines. So just some important things to look at that we've covered is, your first offer has more influence on the final deal than any other factor. Okay. So if we stop and look at that, you could make a first offer, Paul, that's too high if you're a buyer.
Mm-hmm.
Okay. And then all of a sudden you've left yourself in a corner where you've got nowhere to negotiate and you're going to end up overpaying. So, we've talked about offering something that's too low. You also can offer something that's too high and has an influence over the outcome, and you end up paying too much. And from a seller's point of view, if they counter offer, so if someone's made an offer, Paul, and you've counter offered that and you really haven't moved much from the original price, you're going to influence what that outcome looks like. So
very true.
You need to think about your first offer. You need to have some metrics behind it and some, like you said before, how did you get to that offer? So
You need
to think about what that is.
For me, in the position that if I'm acting as a broker or if I'm selling a business or whatever position I'm in, if you come to me with an offer that's lower than my expectation, but you clearly articulate how you've come up with that offer and why you see the value at that. That does two things. As I mentioned previously, it gives you an angle to see where the opportunity is to push that price higher if you're on the selling side. But it also, I think it puts across the intention that you're a serious buyer, that you've done some due diligence, that you've looked at scenario. And those people, I mean, me personally, I'm much happier dealing with somebody like that, even if it's a lower offer. You can work with 100%. That, rather than just a low offer coming forward with no clarity. And the same as we talk about lease negotiations and lease assignments. It's okay asking for a rent reduction. It's okay asking for a rent-free period, but what's the landlord getting from it, and why should he give it to you? And what are you putting into the deal? Why? There has to be a logical reason. And I think that's it. That side of things here, it comes down to two things: proper due diligence and logic. And if you nail those two things and put it forward in the right way, I think that's going to help the negotiation, tenfold.
Yeah, definitely. And it comes back to one word, which we will cover in this in a second, is preparation. On both sides, understanding where that level is. This last one I'm actually quite passionate about, Paul, and I'll work my way through this, but never give up anything without something in return. So we call it trading concessions. Okay. So maybe, for example, I'll try and frame it from a selling point of view, or from a transactional point of view, where somebody says, well, I need I need, $10,000 more to be able to complete that transaction. And you might say, well, okay, well, I'll give you the 10,000, but I need another 30-day settlement time.
Yeah.
And so
okay.
you're trading concessions. Now, that example in itself puts it back on the buyer and says, okay, well, I've got the money I wanted, but they've asked me for a little bit more as well. And they're more likely to say yes, Paul, to be honest. When you're trading concessions, people get concerned about trading concessions. And I have to be honest. I mean, again, I negotiate all day, pretty much all day, every day, even with my kids. But anyway, I expect to trade concessions. I expect it, and I build it into my negotiation.
Okay.
So,
when you're conceding something, you're at the same time thinking of something you can give.
Yes.
Do you proactively offer that, or do you wait for them to come back and ask for it? Is it if you're on that side?
It may depend where I am in the negotiation. So maybe the negotiation's coming to the pointy end, and I'm starting to see that for me to get another 10 grand is a real, like, can I get there? I'm not 100% sure I can get there, and maybe I've kept something up my sleeve. So I'll say, here's I need $10,000 more rent a year. I'll give you another 20 grand capital, or a month's rent free, or I'll give you. So I keep something up my sleeve, and that's why if you negotiate all the way to the end and you've got nothing to give, then negotiations can stall and make it quite hard. So you want to always give yourself something up your sleeve to be able to give back, to encourage a higher price or a result that you want.
Okay, so if I'm selling my cafe, I'm thinking I go back with a counter offer. Maybe I've got a concession up my sleeve, as you said, that I can give if requested, but we're not proactively on that side of things. If we're working with the buyer, we're not proactively giving that concession, or are we? Are we saying, look, if they come back, if they know about this trading concessions and come back, we've got that up our sleeve, or are we kind of going and saying, well, look, let's concede to that and give them something that they want.
I think it's really important to understand where you are in the negotiation process, Paul. So if it's early days, I wouldn't be giving concessions straight away. I would wait and be pushing and holding line on what I need until it gets to a point where you're like, you know what, this next 10 grand that I need to get on the sale price, it's becoming really difficult. I'm not sure if there's much more in it. I think they've reached their limit. You start to get that feel, and then you can start to say, okay, well, I'm going to use a concession here. I'm going to give them something in order to get that price.
Yeah, so I'm just trying to think of a recent example of that, and that would have been a deal this week whereby the offer came in lower, but the offer was to get the contract exchanged before the end of the month. So with that, you're immediately, he's quite smart. He's worked out there's time constraints. So he's come in and offered a lower price, angled on the fact that there is that time constraint. And if the deal goes through quickly, that will save the vendor paying another month's rent. So, there's an uplift there. And that is a fair trade in some respects.
And so that comes back to what we were saying before about price isn't just everything. There's multiple layers to certain things. So be really aware of it. And I think, trading concessions is not abnormal. It's quite a normal thing to do if you're dealing with a landlord, especially.
And if you're on the side of the sale, if you're selling, then be careful not to allow too much information to slip out about time restraint or constraints, because, as I said, once the buyer gets wind of that, then they've got an angle to come in and put in a lower offer based on that. So the less you give away, the better.
Yeah, and the other thing too, Paul, you would hear this all the time, I would imagine too, is I can pay cash. Not cash is over the counter, but I haven't got a loan. I can pay cash, and I can make this transaction now, and I'll sign the contract at the end of the month. So all of a sudden,
that's right. And definitely, I mean, to be honest, in my opinion, you shouldn't be making an offer unless you've got the money.
That helps.
Unless you've got approved finance or cash in the bank, you shouldn't be
ready to go.
Shouldn't be making an offer. So, but people do, as you said, people do try and use that angle. If I'm representing a seller, then I typically won't use that as a motivation to sort of. I mean, it's definitely a good story to go back to the vendor with if you've got somebody that's got the finance. But in my experience, until I see that assets and liability statement I don't really believe a great deal of what I'm told.
Yeah.
Because you'd be amazed the amount of people that have made offers, told me they're cash buyers, and then when I've followed up with the assets and liability statement that they weren't expecting, and they have to demonstrate that, all of a sudden, everything comes out of the woodwork. Well, I need to go to the bank and get finance and well, you told me you're a cash buyer. Well, I will be a cash buyer when I've got the finance.
Yeah, you just blew your whole negotiation doing that. You're done.
You've lost credibility. You've lost credibility with the vendor. You've lost credibility with the broker, with whoever you're working with. It's just a flawed process. So that, as you said, all comes back to planning.
Preparation and planning. All right, next one. So key negotiation guidelines. I think there's 2 here. Preparation and planning. There it is. So, I mean, we've said it already. It doesn't matter what side of the fence you're on. You have to prepare and plan. You got to know how much cash you got. You got to know your time constraints. You have to know, what your motives are. You have to, know what a business is valued if you're the buyer or the seller in the marketplace.
Understand the current market and the value.
Yeah, you and I again. I mean, I deal with landlords, a lot, and you deal with buyers and sellers. We would both rather deal with somebody that's actually knows what they're doing than not.
Yes.
When I get an offer in and I can see that they don't know what they're doing, it worries me 100 times more than when I get an offer marked up with a whole lot of different things. I can see that they've planned and thought about it, and I'm okay to say, okay, let's go. People listening to this is preparation, planning, know your numbers, know where you're at, what you need. Take some time to set some personal goals and some business goals yourself on both sides, and then work towards achieving those. And that's preparation and planning, Paul, both financially and your goals and what you want out of life.
That's right. Yeah, I think that whole on the sales side, the whole due diligence around what's the value of your business, where's the market value currently, versus what do you need to get for it, going back to that planning and preparation. If it's not worth what it needs to be to give you what you need, when you work out what your liabilities are, then you need to either pay those liabilities down or do some work to increase the value. So knowing that from the outset is crucial. And if you're buying as well, you need to make sure that you're not overpaying. So there's definitely a lot of value in due diligence on both sides there.
So preparation and planning will save or make you money, right? Doesn't matter which side, as you said. It taking the time to do it will either save you money if you're buying or make you money if you're selling. Take the
100%.
time. Take the time.
It's for me on the sales side of things. If you do this right, then 60 to 70% of the time spent will be on the planning and preparation, and the remainder, the small amount, will be time on market and transaction. A lot of people do it the other way around. They'll list the business too quickly and price it wrong, and then get stuck on the market, have to lower it, take it off, and put it back on. It's just a flawed process doing it that way. So I know we probably have said it a lot about planning and preparation, but it's because we both understand the difference it can make to a transaction, whatever it is, whatever you're negotiating.
Yeah, very much so. Then this one's a real tip, Paul, because it's clearly communicate your non-negotiables. Now, this, I'll try and put it in a buying or selling scenario, but there's certain things when you're negotiating that you pick up from the other side that is not negotiable. So maybe it is time, Paul. Maybe I need the transaction to settle by a specific date, or maybe it is price, or coming in from a seller's point of view, the non-negotiable is I need a cafe this financial year. So if you make clear your non-negotiables, it allows people on the other side of the negotiation to understand, well, okay, I know I'm not going to work my way through that because that's a non-negotiable. You start to get a feeling as to, okay, I can't negotiate my way around that. It comes back to concessions. I might then go another way around to get what I want and give something back in concessions and the likes. But if I'm from a landlord's point of view, Paul, it'll be I can only pay maximum 10%, 8% gross rent on my forecasted sales. So you're setting a non-negotiable and you're actually starting to dictate what the negotiation looks like.
Yes. Yeah.
No, I need a fitted out cafe with gas, exhaust system, power board, all that sort of stuff. They're my non-negotiables. It really starts to dictate what that negotiation looks like.
Yes. Yeah. Okay. Yeah. No,
Yeah.
that's a good tip. That's a good tip. And
Yeah.
when would you suggest? Is that like early on that you can communicate that? Earlier the better.
Early.
Yeah.
Yep.
Okay.
Yep. And if you're leasing a new property, if you've got a new property you're leasing, earlier the better. And it just puts it back on an agent or a landlord to say, okay, if I want to do business with this person, then I've got to, somehow we've got to work our way through these non-negotiables. But at least I know what they are.
Yeah.
It sets a tone.
Okay.
It sets a tone.
Yeah.
All
Perfect. Right. Very, very useful. Great.
Click.
Is that
it? I think it might be it.
Yeah, that's it.
Maybe there'll be one little thing pop up here, which will be no deal is better than a bad deal.
That's good. I like that. Yeah. And
you and I would both agree on that 100%.
Yeah, definitely. Especially when you're signing something as binding as a contract of sale or a lease, and usually you're signing both at the similar time. You have to be very careful that you're signing something that you feel is a good deal for you.
Made a bad deal, you just, oh my God, they're just
No,
bad.
That's a good tip. Yeah.
And that's it.
Yeah. That's great. Well, very, very useful. Thank you very much for going through that, Julian. It's kind of, I think, useful just to revisit that every now and again. If you're partway through a negotiation or just about to go in, then it's a good resource to hopefully refer back to at some point as well.
Yeah, definitely.
For people like you and I that do it all the time, there's probably some good reminders in there for us as well.
All the time. I'm reminded every day I negotiate. I still have to think about where I'm at in the negotiation. So have to be in the moment a lot of the time to realize where you're at.
Yeah. So that's a great tip. No deal's better than a bad deal. I quite like that. And I think for me, the other thing is to just consider, that the old adage that you've got two ears and one mouth for a reason. So in a negotiation, you should really remember that and listen more than you speak. And usually you can come out, with things stacked more in your favor on that basis.
Silence can be really, really powerful.
It's interesting that I read, I read a lot of stuff about that sort of thing, and I did read something about that in several books actually, whereby in negotiation, if you get to the point where it's almost the silence has been that long that it's getting awkward, then you just got to stick with it. And usually,
stick with it.
If you can do that, it's fascinating how it works, and ask open-ended questions. I found works really well as well. So but great. I think we could probably talk most of the day about this. I really enjoy the art of negotiation. It is a skill. It is an art form, and it is something that you're continually improving on and can improve on.
I think the minute I wake up, my 16-year-old generally starts negotiating some way. So
yes, that's it. You start giving concessions first thing in the morning. Actually, you can learn a lot from them. They're fantastic.
Kids can be quite good at it. Jesus. Relentless.
Fantastic. Well, as we always say, regardless of when you're watching this, do feel free to post any questions or comments you've got about negotiating below this video, and either Julian and I would be more than happy to reach out and help you if we can. So. As Julian is negotiating leases most days of the week, and I'm negotiating sales most days of the week. So we're fairly well placed to give advice and suggestions and tips. So do make sure you reach out if you need to at any stage of your business journey, and we'll be happy to help if we can.
Yeah, here to help.
Perfect. All right. Well, thank you as always for your time, Julian.
Yeah, thanks,
we'll
Paul.
Look forward to catching up same time next week, if not before.
Done. Speak soon.
Good stuff. Thanks, Julian.
Thanks.